we left off, yeah. Sell or process further. Okay, we covered the multiple product case, yeah. Where we say whether you need to process further the products, because some of the products can be sold at after common process, and they can be processed further, yeah, and then you can bring more value. So the decision whether to process further will require some incremental analysis, yeah, so that you can decide whether you need to process further or not. Okay, and we have covered this, I think. Yeah. So let's okay. Okay. So what is the decision rule here? Whether you want to sell or process further, yeah. Process further as long as the incremental revenue from processing exceeds the incremental processing cost, yeah. So it's always a matter whether you make more revenue or you're saving costs, things like that. That will be a better decision. Okay. And have we done this? Did we do this one? This exercise? We did, right? Easy, does it? I just unpainted furniture. Yeah, I think we have done this. Where you need to paint further or you just sell it, yeah, without the paint. Okay. Right. So now I want you to do this one. Yeah, this pictures 3 products using the same split of point 200,000. So these costs are allocated to the products on the basis of their sales value, selling prices per unit, and the 3 products at the split of point, and after for the percent. So you find that if these 3 products are sold at the split of point, yeah, the cost or the price of selling will be X $10, Y 1160, Z 1940. But if you process further, you can sell it more, higher price at X at $15, Y at 1620, and Z at 2116. Okay, but of course, you want to process further, you need additional processing costs. Yeah. So you need to incur more costs in order to produce this number of units and sell it at $15. So which product should be processed further and which should be sold at the split of point? Okay, and the next question is, would your decision be different if the company was using the quantity output to allocate joint costs? Okay, so can you have a look at this one and try to figure out and do the incremental analysis of it? Yeah. So you need to prepare the columns, yeah. You need to calculate what is the net income if you were to sell them or if you were to process further. In this case, you need to calculate what is the incremental revenue. Okay, compare the three products. Normally we do one or two products, but this one you have three products. So calculate first what is the revenue at the split of for XYZ. And then calculate what is the cost. If you were to sell at the split of cost, a slip of point. Okay. And you will find whether you will have profit or loss at that point. And then you also calculate what is the revenue after processing. And compare them and see whether you have made any incremental profit or not. Are you okay, class? Are you following me?
Yes, Prof.
Yeah. Okay, let's see what have you done. So first I said calculate what is the revenue at the split off point and also if you process further. Okay, so if we go back to the question, right? If you sell at the split off point is $10. If you process further, you are selling at $15. Okay. And you compare with the cost, right? So are you making incremental increase in profit for X? What do you get? What is the incremental increase or decrease for product X? Can somebody answer? Hello. Hello, class. Are you still around?
Yes, Prof.
My question is, what is your answer for X, product X? What is the incremental value for product X?
I think
The incremental revenue for product X is 25,000. How do you get that? The revenue, if you process further, minus the revenue if you were to sell at split off point. So you will have an incremental revenue. Actually, you can prepare another table to see the difference in the incremental value, okay? So for X, incremental revenue will be $25,000. How do we get that? Is the price you sell if you were to process further, compare with the price if you were to sell it at split of point without processing further. So there is an incremental revenue of $25,000. And the incremental cost, what will be the incremental cost? The cost to process further, isn't it? Yeah, additional processing cost. So you minus 14,000 for X, and you get the incremental difference. In this case, you make profit. Similarly, you calculate for Y and Z, okay? So Y, if you were to process further, your revenue will be 162,000. Whereas if you were to sell off earlier, without processing further, you will get 116,000. So what's the difference in the revenue? Is the incremental revenue of $46,000. What will be the incremental cost? The cost to process further. That is 21,000 for the product Y. So here for product Y, you also has an incremental increase in profit, 25,000. Yeah. How about Z? Product Z, if you have to process further and sell it, if you get 86,400, and if you were to sell off earlier without processing further, you will get 77,600. So there's an incremental revenue of 8,800. But the cost to further process this product is 12,000. So there is a decrease in the profit. Okay, you're not making profit here. You are not making profit if you were to process for the product Z. Okay? So, what would be your answer then? Yeah? Your answer would be you can process further product X and Y, but not product Z. So, product Z should be sold off at the split off point. Okay? Right? So that would be your answer. Okay. What's going to be for the answer for the next part? Just asking you, would your decision be different if the company was using a quantity of output to allocate the joint cost? Yeah, the answer is the decision will remain the same. It does not matter, okay? It does not matter, all right? Why? Yeah, because of the joint costs are allocated. Does not matter how you allocate the joint cost, because the joint cost is irrelevant cost. Okay, so remember relevant and irrelevant cost. Remember, in incremental analysis, we take into consideration the relevant cost. Anything that is not relevant, that means irrelevant cost, we do not have to consider. Okay, yeah. One good example is the repair machine. Oh, we have not done that. Okay, we're going to do this after this. All right. Okay. So any irrelevant cost we don't need to consider in our incremental analysis. Okay, class? Yeah. So I think we stopped there last last week. Yeah, where you can have a process further or you don't need to process further. Yeah. So the decision, yeah, remains give the incremental difference benefit you. Yeah. So that means if you make profit, otherwise you can just sell it off without further processing it. Okay. So the next thing or the next incremental analysis that we're going to do is on the consideration whether you want to repair, retain or replace equipment. Okay. Because this is very common. Yeah, this is very common when you have a machine. Yeah, even if you have your own car, if you have your own car and your car's been with you for many years, maybe 7 or 10 years, and then start giving you problem and you keep repairing your car, yeah, and spending some $1,000s to repair, and then you can use it and then it break down again and you feel like you're repairing it again. But is it better for you to buy a new one? Yeah, replace this car that you have now that's always giving you problem. Of course, when you repair, you can still use the car, but for how long can you use the car? Yeah, or is it better? Is it better for you to buy a new car? Yeah, okay, will not give you more headache, isn't it? When you have a new car, at least for the next few years. So similarly in business, yeah, you have machines, you have vehicles, yeah, and these machines, these fixed assets, normally will be used tremendously to bring in income to you. Okay? You use them to bring income to the business. So it is very important to decide, yeah, whether is it worth to repair the machine or is it better to replace it? Yeah, replace it. Replacing it doesn't mean that you get to replace it with a totally new machine or new equipment. It can be a second-hand equipment, but as long as you do the incremental analysis and the analysis shows that it brings better value to you. Yeah, okay. So if you can understand that, let's look at the illustration. So Jeff company is considering replacing a factory machine with a new machine. The company has a factory machine that originally cost $110,000. It has a balance in accumulated depreciation of $70,000. So its book value is $40,000. So I'm sure this is basic financial accounting where the fixed assets have depreciation over a few years, and then they will be calculated as accumulated depreciation. Okay, and in this case, this old machine originally cost $110,000, but after a few years, it has depreciated $70,000. So now its book value is $40,000. So you notice that 110 minus $70,000, you get $40,000. And it has a remaining useful life of 4 years. So meaning that this old machine, yeah, from the production of this machine, it was stated that after using it for a few years, now it has a balance of 4 more years. It's remaining useful life. So the company is considering replacing this machine with a new machine, and a new machine is available for $120,000. Okay, it is expected to have zero salvage value at the end of its 4-year useful life. So now it's comparing, rather than keeping the old machine for the next 4 years, they want to buy a new machine which is also lasts for the next 4 years. Okay, and if the new machine is acquired, the variable manufacturing costs are expected to decrease. All right, from 160,000 to 185,000, and the old unit could be sold for 5,000. What does it mean? It means that if the company use a new machine, they can save some of the variable manufacturing costs. At the same time, if they buy the new machine, the old machine can be sold for 5,000. Okay? So these are the relevant costs that you need to take into consideration, yeah, whether you want to buy a new machine or not. So the incremental analysis for the 4-year period, so that means for the whole life of the machine, yeah, whether it gives you a better value or not. So let's look at the incremental analysis. Okay, so if you retain the existing machine, existing equipment, if you still want to use it, it's stated there that it will incur variable manufacturing cost of $160 per year. So this is analysis for the whole 4 years, yeah. And you find that you will have to bear variable manufacturing cost of 640,000. That means 4 years times 160 variable manufacturing costs for the old machine. But if you were to replace the machine, yeah, okay, then you can save some of the variable manufacturing costs, which is 125,000 per year, sometimes 4 years. So you get 500,000. And you have to pay for the machine, of course, yeah, all right. And then you can knock off some of these costs from the sale of the old machine. So sell this old machine, you get 5,000, but you have to pay for it, and you also have, yeah, save some variable cost of 140,000. All right. So let's see, yeah, what's going to be the net. Okay. So netting off all this revenue and the cost involved here, you will get 25,000 of incremental income. Yeah. So by replacing the equipment, buying new equipment, you will have an incremental value of 25,000. So what's going to be your answer? The answer is better to replace the machine. Okay. Yeah. So remember, yeah, the book value of the old machine does not affect the decision. The book value is a sunk cost because you have used the machine for a few years. You already incurred the depreciation of the machine. You have used up the machine. So all this doesn't make any difference anymore. So the book value is a sunk cost. Okay. Costs which cannot be changed by future decisions are not relevant anymore. Okay, so we don't use it in incremental analysis, right? But any trade-in allowance or cash disposal value of the existing asset is relevant. Yeah, of course, if you able to sell the old machine and get some money for it, normally you trade in, isn't it? You will trade in the old machine for the new machine, and of course the price you have to pay for the new machine will be less by the value of the trade-in, and that is counted, and that is included in your calculation. It is relevant cost. Okay, all right. So this is also quite interesting, yeah. Whether you want to repair, retain, or replace equipment by looking at the incremental value. Okay, so let's look at another exercise here. Yeah, Rochester Roofing is faced with a decision, and the company relies very heavily on the use of this 60-foot extension lift for work on large homes and commercial properties. Last year, the company spent 60,000 refurbishing the lift, right? And it has just determined that another 40,000 of repair work is required. So now they are deciding whether they need to further repair the lift or not. Yeah. And then alternatively, Rochester Roofing has found a newer used lift. So this one is not totally brand new lift. They found a second-hand lift that is for sale for 170,000. And the company estimates that both the old and new lifts would have useful lives of 6 years. Okay. However, the lift is more efficient and thus would reduce operating expenses by about 20,000 per year. Okay, so if they buy this second-hand lift, yeah, they can still save some operating expenses, yeah, by 20,000 per year, right? And the company at the same time could also rent out the new lift for about 2,000 per year. So what do you call this? Yeah, what do you call this $2,000? Okay, think about it. Yeah, we did discuss it last class. And the old lift is not suitable for rental anymore. Okay. So I hope you can imagine, yeah, the 60-foot extension lift. Yeah. So normally in the construction work you see a lot of extension lifts, isn't it? Yeah. These lifts normally are very useful when you're having the job, when you are doing it. Otherwise, sometimes you can rent them out. Okay, you can rent to other people if they want to use it, and if not, if you are not using them. Okay, so if the company rent out the new lift, they can get about 2,000 per year, and the old lift is not suitable for rental. So there is an additional income if they buy the old lift. So the old lift could currently be sold. The new lift is purchased. Okay, so this is another relevant cost that you need to consider. So prepare an incremental analysis. Okay, can you do this? Take this format and compare whether there is any saving in operating expense, in the repair cost, the rental revenue. If they retain the equipment, what costs will be involved? Yeah, what are the how much will be the net income? All right. So yeah. So the first column, if you have to retain the equipment, you will have to still incur operating expense of 120,000 and the repair cost. Right? Okay, so rental revenue will go here. If they buy a new machine, you can get rental revenue. If you buy a new machine, you have to pay for it. Yeah, and the sale of the old machine also you can knock off from the cost if you take a new machine or new equipment. Okay, right? So the operating expense, if you were to retain the equipment, yeah, the repair cost. How about the rental revenue? Yeah. The sale of the old machine. And at the end of the day, you will find that there is an incremental income increase, yeah. So it is better to replace the new machine. Okay. Okay. So again here we just compare what are the relevant costs involved. You were to retain or you were to replace the equipment. Yeah. At the end of the day, you can see whether there is any incremental difference or not. And the one that benefit you will be your answer. Yeah. Okay. This is an exercise. Yeah. So can you have a look at it? Harvest timber use machine to remove the bark from cut timber, and the machine is unreliable and results in significant amount of downtime and excessive labor costs. So the management is considering replacing the machine with a more efficient one, which will minimize downtime and excessive labor costs. And data are presented below for the two machines. So this old machine originally cost 340. There's an accumulated depreciation of 230. The machine is estimated to last the estimated useful life remaining 5 years is the same as the new machine. Yeah, but you need to pay 370,000 for the new machine, right? It, it is estimated that the new machine It is estimated that the new machine will produce annual cost saving of 85,000, and the old machine can be sold to a scrap dealer for 8,000. So both machines will have a salvage value of 0 if operated for the remainder of their useful life. So again, the decision here whether you need to retain or replace the machine. So can you do the incremental analysis here? Yeah. Prepare a column like this. How much, one column whether to retain or whether to replace, and you have the incremental column here, and compare the whatever cost that is relevant to this calculation. Okay. Please do this one first. Okay, let's say how do you answer this? This is more straightforward if you is mentioned in the question that if you buy a new machine, you will have a cost saving of 85,000 per year. So cost saving will be 425,000 for 5 years. Yeah, but you will have to pay for the new machine 370,000, and at the same time, yeah, you can knock off some of the amount from the sale of the old machine. Okay, so if you retain, there is nothing incremental cost that is involved here, no difference here. So you just take the incremental value from the cost involved, relevant cost to replace the equipment. Okay. So the incremental value is 63,000. It is positive. So the company should purchase the machine, the new machine, because there will be an increased analysis for making decision whether to retain the equipment or replace the equipment. Okay. So any question? Plus, if you have your textbook and you follow your textbook, it is not difficult to understand, okay? You can follow them quite easily. Because the next thing I want to show you today is make decision whether you want to eliminate an unprofitable segment or product. So let me just give you some scenario when you go into a departmental store, yeah, or you go to Aeon, for example. Aeon is a big store, yeah, and you have so many products and so many segments, okay? And in any departmental store, you may find that some segments of the business is not doing as well as the others. Maybe because there are too many segments that department, and that department is not so popular among your customers, yeah, and it's not giving you profit. So you want to maybe after a few months or few years, you observe that the same thing is well. Right? Then that is not very popular when you go to supermarket or when you go to departmental store. Nowadays, people don't want to go out. People don't go to departmental stores. People buy online, so you may find that certain things are better to buy online rather than buying from the departmental store. You don't need to go to the shops, yeah. So maybe you will not find it anymore. You will not want to go to the departmental store anymore, yeah. But certain things you need to go there because you need to feel it, you need to try it, yeah, like shoes. It's better to go to the shops, yeah, to try the shoes, yeah. Is to me it's rather difficult to buy shoes online because you may not know whether it really fits you or not, yeah, unless you are very familiar with the same product or with the same brand, with the same size that they bring out, yeah. So then you will not want to go to the store anymore. But there are certain things that you need to go to the store. So you find that some of the segments in the stores will not be popular anymore because of the online purchases. So again, when you are making decision whether to close a segment of the business or you want to stop selling a product, you need to make some incremental analysis. And the key focus again is on the relevant cost. Consider what's the effect on the related product lines. Yeah? But remember, you have fixed costs. Fixed costs, normally, if you close one segment, then the fixed cost will be absorbed by the other segments. Okay? For example, if your fixed cost, for example, a rent. If you rent a building, whether you have the product or you don't have that product, or whether you close a segment or not, you still have that space. So you still need to pay for that rent. Yeah. So fixed costs allocated to the unprofitable segment must be absorbed by the other segments. The next thing you need to think of is the income. When you close a segment, of course, you will not receive any more revenue from that segment. Okay. So net income may decrease when an unprofitable segment is eliminated. So the decision rule is you retain the segment unless fixed costs eliminated exceed contribution margin loss. Okay, so I hope you still remember contribution margin and fixed costs when we did our CVP analysis. Yeah, all right. So contribution margin must always be bigger or higher than the fixed cost. Then only you get your net income. Okay, shall we go on then? Let's look at how we do the calculation. Again, you have to take into consideration the relevant costs. So here in this business, where Venus Company manufactures 3 models of tennis rackets, okay, and 3 models, Pro, Master, and Champ, you find that from this income statement, yeah, Champs is not doing well, is not making profit here compared to the other 2. So in total, you find that your net income is reduced by Champ's loss. Okay. So remember, there is fixed cost, and Champ's fixed cost is 30,000. So do you want to close this, or do you want to eliminate, stop producing this racket? Yeah. So you have to think properly and do the analysis, incremental analysis, whether it is better to stop selling this Champ, producing this and selling them, or whether to let it be. Okay, so let's see whether you can make the right decision or not. Okay, remember, Pro and Master make profit, not Champ, but Champ has fixed costs that need to be absorbed by these 2 if you stop producing this. Okay, right. So you prepare the income statement and you ignore Champ, meaning that you planning, what if you plan to eliminate Champ product? So you have a look at these 2 products. So Pro, Master have a sales and variable cost and the contribution margin. So you take the contribution margin of these 2 products. Okay. Now the issue of fixed cost. So the fixed cost is increased. Why? Assuming fixed costs are allocated 2/3 to Pro and 1/3 to Master. Yeah. So when you eliminate Champ, the fixed cost of 30,000 must be absorbed by these 2 products. All right. And the 2 products, the fixed cost is allocated as 2/3 and 1/3. So what's the total fixed cost earlier? It was 160,000, right? The fixed cost was 160,000 in total. So when you divide it back into these 2, it becomes 100 here and 60 here. So now you find that the net income is 210. Okay. net income, if you close CHAM or you stop CHAM, you get 210. What was the net income earlier when you have CHAM?
220.
You have 220, right? Okay. So meaning that if you close CHAM, your net income becomes 110. So what does it mean? Yeah. It means that the total income is decreased by 10,000, right? Yeah. So if you have the three products, you get 220 total income. But if you close that product, your total income has reduced by 10,000. So what do you think? Do you want to eliminate CHAM or not? Of course, your decision will be not to eliminate CHAM, isn't it? Yeah.
Yes.
Okay. Yeah. So there is an incremental drop in the income. Yeah. If you close or you eliminate or stop producing and selling CHAM. Okay. So this is the way of doing the incremental analysis. Yeah. If you have to face with this issue of whether to eliminate an unprofitable segment or not. Okay, so again, you are looking at the incremental difference here, whether it is an advantage to you or not. Okay, what if we assume that 22,000 of the fixed costs attributed to CHAM can be eliminated in the line if the line is discontinued? Okay. So just now, we have to make sure the fixed cost is absorbed by the two, isn't it? By the two products. But now, what if, 22,000 of fixed costs can be eliminated? If we eliminate CHAM, then we don't have these 22,000 fixed costs. We only have 8,000 fixed costs to bear. Yeah, if you close CHAM, yeah, then your analysis will be slightly different. Okay, so the fixed cost, if you continue, you still have 30,000, but if you eliminate, you don't need to absorb all the 30,000, you can eliminate 20,000, so you absorb only 8,000. And now you will find that your incremental net income will be positive. Okay, so if this is the case, yeah, what is going to be? Yeah, eliminate CHAM. Okay, so your decision, it is better to eliminate CHAM because your net income will increase. Okay, class? Can we proceed? Okay. So the next exercise is Lambert manufactures several types of accessories. For the year, the knit hats and scarf line had sales of 400,000. Variable expense, 310 and fixed expenses 120. Therefore, the knit hat and scarves line had a net loss of 30,000. Okay. Then you find that if Lambert eliminates this line, these knit hats and scarves, 20,000 of fixed costs will remain. So now you want to see what is it going to be? Are you going to close it or not? Right? So if you close it, you still have fixed cost of 20,000. Okay? So you find that there is a positive, incremental value of 10,000. Yeah? Okay? Okay. So if you eliminate it, then there will be incremental increase in your income. Okay, right? So I'm going fast now because we have a few more minutes to finish. I have one more to do. So if an unprofitable segment is eliminated, so you make sure that fixed expenses allocated to the eliminated segment will have to be absorbed by other segments. Okay, by other segments, unless it says otherwise. Okay. there is one thing you need to consider because it makes a lot of difference. Yeah, the fixed cost. Yeah, the fixed cost will make a lot of difference. There's another exercise here. Yeah, where Milwaukee has three divisions. Yeah, Bud, Weiss, and Okay, and again here the question is prepare. Okay, here you notice that Weiss is not making profit, right? Weiss section, Weiss product or division. Weiss division is not making profit. So all of the allocated costs will continue even if a division is discontinued. Okay. And Milwaukee allocates indirect fixed cost based on the number of units to be sold. So since Weiss division has a net loss, so they feel that they want to discontinue this division. And if Milwaukee feels if the division is closed, that sales and the Bud division will increase by 12%, and that sales at the division will still remain the same. So if you close this division, the sales of Bud division will increase slightly. Okay, so let's see whether it is best to close it or not. You prepare the column and compare them. Okay, so I'm just going to go fast. All right. So here we show that if that Weiss division is closed, okay. So if Weiss division is closed, you find that Bud's revenue will increase slightly. Yeah. Okay. And then the variable cost. Remember, variable cost vary with the number of sales you make. Yeah. So here the variable cost also increase. Yeah. And then allocation of the total allocated fixed cost. Yeah. This is how the allocation of the total fixed cost, right? And then 20 or 26. But 336, yeah, 303, 360. I think this one we have to work it out. Okay, class, yeah. This is the worst part of having online class because I don't have the tool to show you the calculation here in writing. Yeah, okay, but never mind, we can go through this. Yeah, I just want to finish this first. Yeah, have a look at the allocation. I have to go back to the question again. Yeah, right. So you need to calculate the fixed cost again. Yeah, right. Since the Weiss division has net loss, well, feel that division is closed, the sales increase and the sales at the Earl division will stay. So you need to calculate, remember that the fixed cost will be absorbed by the remaining division. So you have to divide the 20,000 fixed cost to it. Okay, times 20, 360 plus 2,000. This is the proportion, yeah, the proportion between Bud and yeah. Bear with me for a while. We go back to this question, right? Can you allocate the fixed cost class? Fixed cost of 20,000 need to be allocated. Yeah. This is look at this 3366 plus 2,000. Based on the number of units to be sold. Okay. So number of units to be sold. What's the number of units to be sold? Milwaukee allocates the fixed cost based on the number of units sold. Okay. So what's the number of units sold by Bud is 3,000. By is 2,000. So if we take that, that will be 60%. Right? What is that? This answer 3360 plus 2,000. We need to calculate the units sold will also be increased. Yeah. So take into consideration Bud's increase in units sold. So from 3,000, you have to increase 12%, yeah, class. Okay. And you will get 3360. Okay. Are you following me, class? Hello? Are you following me? I'm just trying to explain this 3360. Yeah. It's actually it's actually from the unit sold. Remember, if we close that division, but sales will increase by 12%. And then we say that the fixed cost is based on the unit sold. Okay. So we need to change the unit sold for buds. So that's why it is 3360 plus 200. Yeah. Okay. And that is how you divide the fixed cost of 20,000. So for when you close the division, you need to absorb the fixed cost. Yeah. So here the fixed cost you need to include as 12,537. How do you get that? 7,463. How do you get that? So you have to calculate based on the increase in the sales of buds. So that's the difference, okay? So 3360 and 2000 is the same. And now the proportion is 3360 over 5360 times 200, and the balance goes to okay? So you will find that when you close that division, yeah, your total revenue is 2560. The incremental income becomes 2560. If you do not close, if you retain this division, even though it is making a loss, your net income is 21,000. But if you close it, your net income is 2560. So what is it going to be your answer? Yeah. You notice that the profit decreased, isn't it? Yeah. So the profit decreased from 21,000 to 20,560. And because of that, is it good to eliminate the division? No, it is better not eliminate the division, okay? Let it be, even though it is not making profit, but the other department makes better profit. And in the end, the net income will be better, okay? So the increase in sales by 20% of the bud division was not enough to offset the loss of the wise division, yeah? So even though you close wise division and bud's sales increase, but the increase is not enough to offset the loss in that division. Okay, class? Yeah. So this is how we do it. Yeah. This one, especially when you want to close a division, you find that just have a look at what are the figures that will change, what are the costs that is relevant, yeah, to be included in the calculation. Okay. Right. So we can safely say that we have covered, yeah, incremental analysis, yeah. So just remember that under incremental analysis, let's just go back quickly to what we have covered in the previous class, yeah. So I just want to remind you that under incremental analysis, yeah, we are making decision, okay, and sometimes, yeah, in making decision, we need to consider, yeah, the financial and the non-financial information, okay. For example, of course, very important is the financial information, especially the revenue and the cost, yeah, how it changes in the revenue, and also maybe some cost saving will have an overall effect on the profitability. Yeah, so it doesn't mean that a division or a product is making a loss, you need to close it, but you need to consider the other divisions as well. So you need to consider in total, yeah. So from the last exercise, we saw that is it profitable to close a division that is not making profit? The answer is not necessarily yes. Yeah. Okay. So you have to look at the incremental value and also the relevant cost that will change. Yeah, that will change the decision. Often you have to consider non-financial information as well. Yeah. Okay. For example, if you terminate a division, yeah, very good examples. If you find that nowadays there are so many branches of the supermarkets being closed down, yeah, there are too many supermarkets. So the ones that is not doing well in some, maybe some areas, yeah. For example, you have a giant supermarket you can find everywhere, but later you find that there are a lot more supermarkets came up, yeah. Okay. You find that some supermarkets or branch of the supermarket is not doing well. So whether you need to terminate it or not. So in making decision, you need to also consider the non-financial information, how it affect your employee. If you close a division or a section, you will also terminate your employee. So what's going to be the effect on them? Yeah, and the environment as a whole, and also your company image. Yeah, sometimes your company is very popular or very well known for selling certain products. Yeah, but even though the product is not doing well, yeah, you still want to retain the product. Okay, right? uh, we need to consider some of this non-financial information. Sometimes we can say that it is not easy to calculate the non-financial information. Yeah, so it is you have to use the wisdom of the management to make a decision. Okay, uh, so this is very important in decision making process. Yeah, and in incremental analysis, yeah, you are faced with choice of alternative actions. Yeah, okay. And the process used to identify the financial data that change under alternative courses of action. So do you have to consider? Do you have to close? Do you have to process again, or do you have to take up the special order? Things like that. Yeah. Okay. Sometimes the revenue may change, sometimes the cost change as well, sometimes the proportion is not, that makes a lot of difference, okay? Especially the fixed cost, yeah, the fixed cost. So always remember that contribution margin, yeah, if it is not sufficient to cover the fixed cost, you will make a loss, okay? Don't forget that, right? And then uh, the important thing to know about this, the cost concept, yeah, whether it is relevant cost, opportunity cost, or sunk cost, yeah, always consider relevant cost. Sunk cost is not, yeah, but look at opportunity cost. Sometimes you do have opportunity cost in your analysis. And this is the 5 incremental analysis that you normally do, yeah, when you are faced with whether you want to accept an order at a special price, whether you want to make or buy component parts, or should you make or buy the component parts of your finished goods, yeah, or sell or process further, yeah. Or you also face with a question of whether you want to repair the old machine or replace with a new one, or whether you want to eliminate profitable or profitable segment of the product. Yeah. So these are the 5 major types of decision that you commonly face, yeah, when you are in your business. So whatever decision you have to make, yeah, it is best to do some analysis, yeah, and see whether your options or your alternatives, which alternatives gives you a better value. Okay. So with that, we finish on the incremental analysis. Yeah. Okay. So in the next topic, I want to do pricing. Yeah, class. Remember I said about your individual assignment. Yeah. Your individual assignment should be written after we finish the pricing topic. Yeah. Okay. So if you have written some of your essay, for the individual one, you can consider pricing topic. Yeah. So it's a reflection of yourself, because we want to learn or to hear from you. What do you think about this managerial accounting? Yeah. How do you understand them? How do you think it is beneficial to you? Yeah. And we have covered the topics on CDP, and we have covered the topic on ABC, and then the incremental analysis. Yeah. So we want to hear from you. How did you find these topics? And I want to include another one is the pricing. Pricing topic is also very interesting, yeah, because it will tell you or teach you, yeah, how to consider when you do the pricing. All right, yeah, this is also help you in your decision making. Okay, so next week will be your semester break, isn't it? Yeah. Okay. So we will meet again the week after next week. So we will cover pricing topic. If it's in your textbook, it is under chapter 8, I think, because incremental analysis is chapter 7. So the next chapter is chapter 8. It's on, what's the name of the chapter? The chapter 8 is on pricing. Yeah. But of course, in your lesson plan, it is written as pricing, target costing, and transfer pricing. Okay, that all is actually under the topic of chapter 8, pricing. All right. So when we have done the topic on pricing, when you have understood the topic on pricing, then maybe you can start writing on your personal reflections of this managerial accounting. Okay, class? Yeah. Do you have any question or not? Do you have any question?
So far, no, Prof.
Doctor,
Yeah.
so our individual assignment
Mhm.
gonna cover CVP and also pricing, right?
Yes. And also can cover ABC. Can cover ABC. Yeah.
So I have to cover 3 chapters: ABC, CVP, and also
Pricing.
pricing.
Incremental
So
analysis. Yes, yes.
also included.
Whatever that we have studied, yeah, until
Okay.
pricing. Okay. Until the
Okay.
topic pricing. So from the first day that we introduce you
Mm-hmm.
to managerial accounting, yeah, right
Okay.
to this topic of pricing. Okay. Right.
So
So you
the individual assignment covered all the calculation chapter, right? ABC, CVP, incremental, and also pricing. Is it
yeah,
correct? Okay.
yes.
Okay, I understand.
I don't expect you to do calculation, okay?
Oh, okay. Means like we have to explain and relate to our daily life, right?
Yes,
Okay.
to explain how you understand them. How do you think? What do you think about these topics? Yeah, yeah. Is it helpful? Do you find that it is an interesting topic? Which one do you like best? For example, things like that. Yeah.
It's not like we have to define the terms. We have to
No, you don't have to define the term because definition of the terms they are all there. You don't need to
means that
copy from
we
anywhere.
have to we have to do by our own opinion, right?
Yes, write in
Okay,
your own
I understand.
words. Yeah,
All
write
right.
in your own words. Yeah.
Okay,
Okay.
I understand.
Yeah, like describing the knowledge that you gain from these topics of managerial accounting. Understand? Yeah, it's your own reflections.
So you said that we have to submit the individual assignment after we finish pricing chapter, right? So
Yes.
can we know the actual date?
So can I give you 1 week after we finish the pricing?
I see.
Huh?
Okay.
Yeah, a
Okay.
week after we finish the pricing chapter.
All right. Okay. Okay,
Okay.
doctor. That's all for me.
All right. So how about the others? Any other question? If you have no other question, then we can finish the class today. Hello. Hello, everyone else.
Prof.
Prof.
Yeah, okay. So, if that's the case, then I will say bye bye to you now, and I see you again after 1 week after the break. Yeah. So that will be what December next month, isn't it? Yeah. Okay. So just take
Yeah.
care of yourself and stay safe. Yeah. and see you all again,
Thank you,
inshallah.
Doctor.
Okay.
Thank you, Prof.
Assalamualaikum.
Waalaikumsalam. Thank you, Doctor.